I'm going to be talking to Samantha McCulloch, who's head of Carbon Capture, Utilization, and Storage Unit for the International Energy Agency. And she's the author of the article, Scaling CCUS to Meet Net Zero Goals for the Oxford Institute of Energy Studies. Welcome to the interview, Sam.
Thanks, Mark, and thanks for having me.
Well, look, can you tell us how CCUS fits into the IEA's net zero by 2050 strategy?
Of course. So at the International Energy Agency, we really see quite an important and far-reaching role for CCUS in a net zero pathway. CCUS we see as one of the key technologies to really address emissions from existing energy infrastructure. So that's both existing power plants, but industrial facilities, recognizing that many of these facilities have only recently been built, particularly in sort of Southeast Asia and many emerging economies. We also see CCUS being important in terms of some of the more difficult to abate sectors, particularly heavy industries, so cement, which accounts for around 7% of global emissions. CCUS can underpin a sort of scale up, a rapid scale up and a cost-effective scale up of low carbon hydrogen production. And these technologies also underpin carbon removal approaches such as bioenergy with CCUS and direct air capture with CCUS. So in our IEA net zero scenario, we have a very significant scale up of CCUS. So it's from around 40 million tonnes or so being captured around the world each year today, to around 1.7 billion tonnes of CO2 capture by 2030. And then by 2050, when net zero is reached, there's around 7.6 billion tonnes of CO2 being captured and transported and stored. So a very significant scale up of these technologies required.
Now, I've interviewed other experts about CCUS, and one of the issues that comes up is capacity to, engineering and science capacity to scale up at this rate. There are a couple of companies, a number of companies, but Shell, for instance, has a lot of expertise in this, but there isn't widespread expertise. And so to what extent does experience and engineering capacity become a limiting factor in scaling up?
So we have looked actually at analogies for scaling up these kind of technologies, and I think there will be a huge demand for certain skills. Some of those skills reside in the oil and gas industry, so subsurface geological expertise, also chemical engineers to run the capture plants. But there will be a need to really scale up the value chains and the supply chains sitting behind CCUS. Central to that will be also the development of the infrastructure and the identification of CO2 storage, where really there can be quite substantial time lags to be able to build the plant and put the infrastructure in place.
You note in your article that there are 100 new projects that were announced in 2021 alone. What are the three key drivers that you've identified for the boost in the activity?
Sure. So 2021 was really quite a remarkable year, I think, for CCUS technologies, as you say, with plans for more than 100 new projects being announced. And this is on the back of many years where we saw the project development pipeline for CCUS really going backwards in many ways. So I think the renewed interest and activity that we're seeing around CCUS is driven primarily by net zero goals. So this recognition that CCUS is really an important part of a net zero pathway. So countries, companies are now looking very seriously at CCUS deployment. We've also seen growing interest in hydrogen production and the role of hydrogen in terms of net zero pathways. And with that is the opportunity for CCUS-based hydrogen production routes. And finally, really new incentives for investment are really pushing forward new CCUS projects, particularly in North America, but also here in Europe.
What role does carbon pricing play in current projects? And what role might it play in the future as countries like Canada scale up their carbon price? I think here in Canada, we're set to hit $170 a ton by 2030. That would seem to me to be a fairly significant incentive to invest in CCUS.
Yeah, so we do see carbon pricing being a really important driver for investment in these technologies, but carbon pricing alone is not going to see CCUS technologies really deployed at the sort of scale and the pace that's going to be needed in the near term. Having said that, I would say that a line of sight to much higher carbon prices, including in Canada, really has, I think, galvanized many industrial players to really look at what they can do to reduce their emissions. And amongst the portfolio of approaches, that they have at their disposal is CCUS. In Europe, the higher carbon prices, I think, similarly are really driving new interest in CCUS. But with that, complementary policies, investment in the infrastructure, and more targeted support. So I think we'll need a mix of policies to support CCUS deployment in the near term, but we'll see the carbon price really taking over in that sort of 2030 time period as one of the key drivers for investment.
Now, in your article, you note 3 priorities that can help scale CCUS. What would those 3 priorities be?
Yes, so recognising that it is quite a challenge in terms of the scale up of CCUS required in a net zero pathway, identified firstly really creating policies that support viable and durable markets for investment in CCUS. So here I cite examples such as the 45Q tax credit in the United States that provides around $50 a tonne for CO2 stored, for example. We've seen these more far-reaching policies really have a big impact in terms of the projects that are coming forward. Secondly, I highlight the importance of targeting industrial hubs and changing the way that we approach CCUS deployment. So we've really shifted from looking at CCUS as being, one power plant, for example, with its own transport and storage network, to having shared CO2 transport and storage that typically would be operated by a separate party to the capture. And this brings with it reduced complexity, reduced costs, economies of scale, etc. So I think targeting these industrial clusters is a really important strategy to scale up quickly. And finally, identifying and developing CO2 storage, recognizing that the availability of CO2 storage has the potential to set the pace of CCUS deployment going forward. In some regions, the geology is well understood and CO2 storage resources can be brought that were made available, brought online within a few years. But in other cases where there's less data available, less exploration, can take up to a decade. So we really need to get started on the CO2 storage piece with a sense of urgency.
Yeah, the idea of a hub seems to make a lot of sense because, and a hub that shares common infrastructure. I know in Canada and Alberta, they're looking at building another. They've already built one CO2 pipeline. They're looking at building another one. And that way they can collect CO2 from a variety of other industries, such as refining and petrochemicals and cement and whatever else. Those kind of heavy industries tend to cluster together. So it makes sense to build common infrastructure. Now I see that happening in Canada, and probably it happens in the US as well. Is it common in Asia and other parts of the world?
So certainly it's the deployment approach that we're seeing in Europe, very much a focus around industrial clusters. And as you identify, this has the advantages of being able to pull in a range of facilities that might have smaller quantities of CO2, for example. So some industrial facilities that still have significant emissions, but maybe not enough to justify their own transport and storage network for CO2 can tap into these networks. I think these networks and the availability of this infrastructure in these regions and in these clusters is going to become a very attractive factor in terms of attracting new investment. So I think having this infrastructure in place will be a key consideration for many facilities moving forward in terms of where they might locate their production facilities. And we are seeing this globally in terms of a focus on developing industrial clusters. Still some standalone projects being developed in some parts of the world, including in Asia, where they're targeting sort of natural gas processing. But I see this really being the model going forward in terms of the shared CO2 transport and storage infrastructure.
Sam, I wonder if the IEA has considered the issue of carbon capture and storage being invested in, being developed for industries that may, fossil fuel-based industries that may in fact become stranded assets within a decade or two or three. And I think primarily, in the reporting that we do here at Energy Media, oil and gas, for instance, the Alberta oil sands. After peak oil demand, your agency is predicting, somewhere around 2030, we'll see peak oil demand decline after that. We don't know how fast it'll decline, but in a scenario where it does decline quickly, you could see that tens of billions of dollars of CCUS infrastructure could become a stranded asset. Has that entered into the analysis at all or the consideration?
Yeah, so I would highlight in this context that CCUS is not just a fossil fuel based technology, and in our net zero pathway by 2050, only around half of the emissions being captured are actually from fossil fuel combustion. The other half is from industrial process emissions, from bioenergy with CCUS, from direct air capture. So this is not just about fossil fuels. But I think in terms of the risk of stranded assets, we were talking about the role for shared infrastructure and building this infrastructure around industrial clusters. I think that the risk of the stranded asset in terms of the CCUS investment is very much mitigated if you're developing the shared infrastructure that's supporting a range of industries. We know we'll still need cement in the future. We know we'll still have steel plants. So the CCUS investment in those plants can support a wide range of applications of CCUS.
Well, Sam, thank you very much for your insights. Really appreciate it.
Thanks for having me.